Mic check, mic check. All right, looks like we're in business. Welcome back. Thank you guys so much for joining me tonight. We're going to jump right into the earnings, I think, for today. And I mean, first we'll look at a couple things. Later on, we'll look at some like goofy articles, as per usual, in terms of the articles that I put out about GameStop on Yahoo Finance. But I feel like really just going through the 10Q and just trying to get to some specifics. And one of the first things I want to talk about is the regional revenue, like year over year, or sorry, same quarter over the same quarter of last year. So do have that highlighted here. I have it up on this other tab here. So that'll be the first thing we'll jump into. Let's hit the chat real quick. What's up, family? Abe, thanks for being here. Hit the like. I appreciate that always. Thank you very much for that. Evening all. Jackson's, thanks for being here. What's up? Heyo, let's go. Yes, sir. Fresh maker. Good looks. Good to see you. So, segment information. If this is going to be the first thing we're going to talk about, if you look at the 3 months ended, there's still... Oh, sorry, we don't even need the other one. It's actually right below it. I'm just realizing that now because just something hit me. I'm like, how do you talk about this yet? But in looking at this, there's a significant difference in the United States in terms of the bottom line. They turn a profit. Previously, they lost $88 million in the same quarter of last year. So that's a $95-ish million swing, near $100 million. And the fact that net revenue only went up about $33 million, and there was that large of a swing, just really shows me the product choice that they're focusing on in being higher margin items. So Canada is about consistent from last year, and same with Australia. And we see a little bit of improvement with Europe, and we do see a significant increase in the top line revenue there, which I do find pretty interesting considering they were focusing a lot on winding down Europe operations. But part of me is thinking now that I'm saying that out loud, maybe it had to do with a lot of clearance sales and, really just trying to sell out the remaining merchandise in Ireland, for example, where I believe they fully shut down operations. So in certain segments, maybe they were completely winding down. It was a situation where they're putting a lot of things on clearance. So if that's the case, then maybe that helped boost the sales a little bit, but still, a little bit of improvement needed on the bottom line, but not too shabby. It definitely could be better though, for sure. But hello, GME fans. Remember to support your store. We need a green Q3. San Diego GME, thanks for being here. Good to see you. But yeah, of course, shop GameStop. Speaking of, I need laptop recommendations, guys. Like, I really need a laptop, I think, because I've been long saying I want to build a PC and get involved with having a setup and just, have my own thing type of deal. But I realize I'm just not in a spot to do that yet, and I'm still going to do that in the future. But I'd rather just get the laptop now as like something that could be a little bit more efficient than my Microsoft Surface laptop. So let me know what you guys think. And then also, since I'm kind of moving around a lot, maybe I'll get because I already have one monitor. If I just get another monitor to have for on the go, I don't know. I'm really just trying to figure things out because there's so much like going on outside of YouTube. And everyone has so much going on, right? So I'm not going to start blabbering about that. But my point being, I think I'm going to get a laptop. So if you know any good laptops that are available at GameStop, because I do want to shop GameStop, of course. It's my favorite company. And it's a lot of what I talk about. So it'd only be right if I bought a laptop from GameStop, right? So let me know what you guys think. I still have to do research regardless. I'm not just going to blindly buy one that any of you guys say. So don't worry, like, oh my God, if something's wrong, it's all my fault. He gets this phone and it didn't work out or something. But I just realized I also have to tweet out the stream. So yeah, let me know if you guys have any ideas on that. See, I only shop GameStop. Alina, thanks for being here. This is the way, right? If you like the stock, hey, why not? But let's just quickly get this tweeted out. One moment here. Yeah, really, I hope everyone's doing well because, it's a crazy world out there, right? There's just so much going on these days, and I feel like as technology develops, the world just gets faster, right? And the faster everything is, like, the harder it is to slow down and relax at times. So I've really been trying to focus on that lately and just, balance like anything else. It's really corny, I feel like, to say, like, oh, yeah, it's just about balance, right? And, like, anything anyone says, you could be like, it's just about, yeah, you're right. It's just about balance. Like, you know what I mean? It sounds like such a generic thing, but it really is true. So, it's really good. You just got to, like, step back sometimes. Let's see. Let's put live now. Yeah, definitely been also working on my Twitter game. So just going to keep writing stuff out on there because something I'm thinking about is it really just makes a lot of sense to write out my information and my ideas and I present it on Twitter, and then also I can make videos and talk about it in my streams, my further thoughts and like what I was thinking when I was coming up with what I was writing, so to speak. So really, I think organization is the next that's what gets me to the next chapter of Tetron type of thing. Okay, 1 second, guys, because I'm trying to tweet it out in a certain type of way. Copy. And I love the new meme of the guy that's like, when it was, I forgot who it was. Someone was on there like, yeah, what movies are you looking at right now? Oh, the GameStop movie? He's like, ugh. Or the Dumb Money movie about GameStop story. And he's like, no, no, no. It's so funny. Okay. Wow, struggling big time here. But we got it. Boom. Okay. Perfect. All right, back in business here. So there's a significant change in the bottom line of the United States. And looking at the 6 months, because now I've already talked about the 3 months, let's look at the first half of the year. So obviously, I think it's evident that a lot of people are very, very focused on profitability for full year 2023. And I believe they will be profitable for full year 2023. And the way they're cutting costs and just how they're executing, I think it's very, very possible. So I don't think it's just far-fetched thing to say. Some individuals may think that's the case, but that's all right. So all in all, we'll see what they report. But in looking at the first 6 months of this year versus the first 6 months of last year, we see the United States revenue is almost $200 million lower, but yet there's a plus $200 million positive swing on the bottom line. So they lost $20 million in revenue from the same 6 months of last year, and then they gained $20 million on the bottom line. So that just really, really shows me the focus of their product mix. So, or sorry, not just their product mix, but also, this is net sales. I apologize. So that just shows the cost cutting across the board. It's not just the product mix. It's cost cutting from the top down, and definitely a lot having to do with SG&A. And, again, Canada pretty consistent. Australia, actually down a little bit. Pretty much the same revenue, but the operating loss was greater. So maybe there's some costs that need to be cut there. Maybe there was some one-time expenses potentially associated with a certain move they were making. But, they've been mostly represented in Australia, if I'm not mistaken, by, what's the other? I completely forgot the name of the stores there that they also have. It's totally slipping my mind right now. But regardless, I feel like there's some improvements there, but they're probably in good shape. And Europe, again, we see here pretty much the same deal as what we see here, and a little bit greater of a loss this 6 month period. But again, I think there's a lot of winding down going down there, and that's potentially leading to a little bit greater of expenses. And also, we see greater revenue in Europe despite wind down operations. So again, I think it's a situation where there's more items on clearance and just really trying to really move the merchandise in the wind down. So that possibly was boosting sales. Like maybe they didn't get the full value of all the merchandise. But if you're winding down a particular region, you have to lower the prices the closer and closer it gets to that final day you actually determine you're closing your doors. How violent do you think this markup will be on GameStop, or how violent you think this move up or market will be on GameStop? It really depends, Austin. Right? There's always going to be the market itself doing whatever it does, and that'll always have some pull in shape or form. And then also, it's a matter of what the company's doing underlying, but that doesn't mean the stock price is always going to like perform in a certain type of way. In the long term, it always matters what the company's doing underlying. But in the short term, the stock price could just do outrageous things. And I personally believe with individuals continuing to directly register shares and insiders continuing to purchase and just individuals who like the stock outside of DRS continuing to acquire shares, and there's definitely still institutions that have some shares, right? It becomes just less and less liquid. So it doesn't take a lot of volume to move it significantly because you just have so many shares that are just being held. So it doesn't take a lot of shares or a lot of actual volume to even move it greatly. So a very large amount of volume could really, really move the stock, because that's something we really haven't seen since its greater moves, is the same kind of volume we once did. And I think that's attributable to the fact that individuals are holding more so than trading these days. Of course, there's always going to be trades, there's always going to be back and forth. But if you get in a situation where GameStop's joining the S&P 500, that's institutions that are forced to own shares. And to me, that is really, really the most bullish thing that can happen for GameStop. I do see, I mean, I guess that's, you could say that loosely, right? Of course, they can make a huge move in some other shape or form, but at this moment in time, I see that as like the largest goal to hit in terms of the stock, because that kind of buying from institutions with the limited amount of shares that are available for it, when you just consider DRS and insiders, not to mention institutions that already own and individuals that already own outside of that. So when you look at that, it could really, really move the stock. One case is Airbnb, and just on the news of it went up, and I haven't checked it since, so we'll see how it's done. But it doesn't, always happen right away. But in the case of GameStop, and I think we really saw it with Tesla. I think it would be like Tesla on steroids, potentially, right? We'll have to see. Let's see Airbnb. See stock rise. How's it been doing? And when did it come out that it was going to be in the S&P? I think it came out right about here, so it started moving it, but it was already kind of riding going in, and that's one of those things to me where like the market kind of knows, right? They always say like, they say Vegas always knows if you're doing like sports betting. It's like the market always kind of knows, or it always kind of seems to start the trend in a way. So when the tide like I say this very loosely, right? Where if it starts to become apparent that there's going to be no choice but to acquire shares of your certain institutions because it's in the S&P 500, you just start like the market, it just becomes people starting to acquire because you know what's coming. But of course, I think there's hurdles. It could not be voted in, right? I don't know the exact personal vote in procedure for a stock. I guess that's something I'd have to look up. I guess I could ask my assistant over here, ChatGPT. See, how do you have to be voted in into the S&P 500? Because it's just such a large amount of buying, and that would just be very, very moving for the stock, I personally believe. Company selected inclusion in the S&P 500 by the index committee at S&P Dow Jones indices. The committee uses specific criteria to determine which companies are eligible for inclusion, such as market capitalization, liquidity, and financial viability. Companies that meet these criteria are considered representatives of the U.S. market, may be added to the index. There's no formal voting process involved for the companies to be included in the S&P 500. Instead, it is a decision made by the index committee based on their assessment of eligible companies. The composition of S&P 500 can change over time as companies' market capitalizations and other factors change. So it's not a static list and is regularly updated. Okay, so interesting. I would have to look into that committee, and we would have to see if maybe there's some potentially aligned interests that would make them not want to include it. When I look at a case like Tesla, where they kind of had no choice but to include it when it got to a certain point, I would have to look at the earnings, because also Tesla's EPS was negative for a long time. So with that being the case, that was part of the reason it probably took a long time for them to get in. But once they were already such a large percentage of it. So there was so much buying. So the larger GameStop's market cap is at the point in which it would enter the S&P 500, the larger impact I think there would be in just the acquisition of shares amongst institutions and potentially short sellers closing, right? Of course, there's always going to be bears, there's always going to be bulls. And at this point in time, I was just saying this in a quick video I made yesterday, if you want to check it out, that we're at a point in time where I feel like the longs, right? The bulls are going to continue to like the stock and acquire, right? And then you have insiders who have evidently continued to acquire, and they're working right at the top, and they're at the front of the lines of turning everything around with GameStop and just trying to push things forwards. And then you have individuals that just continue to like the stock. So, of course, some could always say like, oh yeah, well, you don't truly know people are buying. Excuse me, you don't truly know more people are buying than selling. But I just look at the passionate individuals around GameStop and how there's so many different people in so many different unique ways, and I've just never seen this same type of thing. And then it goes beyond just the stock. That's the thing too. It's the company itself, and it's individuals actually buying the items. Like it's so much more. It's a cult following, right? It's not. It's the people involved in it actually love what it is. It's not, and this is my opinion, right? And not every individual is the same. And maybe not every individual loves the stock as much as they love the company. And other individuals don't love the company as much as they love the stock, right? Whatever their situation may be, there's just aligned interests in a way that I've just personally never seen before with a company, and just passion behind it, and just such a unique situation. So, as you can tell, I like the stock, but always make your own individual decisions. Really, that's always so important. And I think that's a common misconception, that it's just this blended group of people just following some like pipe dream or something like that. And it's like, no, it's really individuals that I think are sophisticated over time in being involved with it, and just seeing a lot of things in different ways. And I'm definitely speaking for myself here for sure, where I'm like, wow, I didn't really see things in this light previously until really, really understanding a company. Now I feel like I have to really, really understand a company before I acquire shares. Whereas previously, let me catch the next big shiny thing, right? It's the next this, it's the next that, right? Oh my God, it's going to the moon. Like I feel like I got through that, and then also I just understand macroeconomics a lot more, and market mechanics, just so many different things, and also just personal finance. But that goes beyond GameStop. It's something I wanted to do, so obviously it's like the individuals have to do that, but it's not just, oh, quick money, right? It's just so much different. I don't know. It's crazy. But how are you going to be playing games on the laptop, Calvin? Yeah, I would definitely like to, but primarily I would like it to be for streaming. That's my main purpose. 6 million profit next quarter, and we're profitable for the last 12 months. Yeah, very true, Freshmaker, very true. And then Q4, I think, really is going to change the game in terms of just it being a fairly significant profit. Not like, oh my God, they just have a huge net margin all of a sudden, but where it's like definitely like respectable. What's up, G? Ghost, thanks for popping in, man. Good to see you. Hope you're doing well, bro. Wendy, what's up? Hope you're doing well as well. Good to see you. If not, I wouldn't get a gaming laptop and just go with the basic one. Yeah, Calvin, honestly, I'm fine with that, because as much as I'd love to play games, like streaming is my number one thing. And again, I just have a lot of different things going on and whatnot. So, with that being the case, I'm mostly going to get streaming, and then eventually I'm going to do desktop. I'll really get involved with games. Can't stop, won't stop. Jay, thanks for being here. Hope you're doing well. Ghost, yes, sir. Sup, Abe? Everyone's saying hello. Believe in and love the business we support, all and shop forever. Yeah, I mean, if you like the stock and you like the company, why would you not shop there, right? And also, that's an idea that I haven't really seen, discussed previously amongst stocks discussed amongst individuals across the internet, right? Where it becomes, just, oh yeah, it's this. Oh, there's a quick buck here. Oh, there's this crazy thing about to happen. Whereas with this, it's deeper than that. It's like the actual company. And also, to me, I see it as a lot of individuals that are invested in the company do see the strength in the brand name and the ability to like further revive it, if that makes sense, amongst people who maybe don't shop there as much as they get into more different things, and just continue to spread the brand name, because it's a long known name and a lot of people have a lot of good memories associated with it. I know I definitely do. For me, it was a lot of like GameCube games, but go in there and like, oh, get some GameCube games today. Like, let's go. Like when I was really young. Will GameStop Player be released for Christmas this year? Will it produce increased revenue numbers? Jackson's great question. So there's still no word on it, right? The website still says working with Telos. I know they're not working with Telos anymore, but I don't think they're scrapping it completely. Considering everything they've done with Immutable and how involved Immutable is with trying to get gaming onboarded, and they're still partnered with Elixir as far as I'm aware. So it seems like something that's just kind of up in the air right now, where at some random point, like ideally before Christmas, especially because it's been quite a while, out of nowhere, just be like, here it is, because that's just how they do it, right? So I'm very curious. If you read the patents for it, it's actually my pinned tweet if I want to go on there real quick. And I don't know why, I was randomly on Jim Group's Twitter, another board member of GameStop. See, Amazon, Chewy, and GameStop. And this was his last tweet. That feeling when you realize your barbershop is also into gaming. Gotta love it. So my pinned tweets, this was from reading through the player patent. Says downloadable games, digital asset transactions, multiple blockchains, esports competitions, streaming, smartphone, tablet, and TV support. So that's from the patent itself, but we don't know truly what's actually going to be within it because that's all within the patent. It doesn't mean it's all there. Maybe it comes more so over time, right? Where they begin to add in like smartphone, tablet, and TV support in whatever shape or form, competitions, and streaming is only streaming of the competitions, maybe not like individual streaming games. But to me, it shows they have a long-term plan for it, and it's still going to be a part of things. And really, for me, I'd like to see them integrate it within their business. Meaning, if you're within a store, you can scan a QR code and like easily hop on when you get home and give something a try. And you got something for going to your local GameStop. Then maybe that also incentivizes you in a new game you're trying to go visit your local GameStop, scan that QR code, and basically then you can get a certain item or a certain unlock in the game. I think that type of thing would be cool. Where if you're gonna just be like, yeah, you know what, I will go shop at GameStop today. I will stop in there, when I'm in the mall, even if I wasn't gonna go for just like someone else who's maybe just casually, gaming. Like, oh yeah, like I did try this game. Maybe we'll hop in there. I know that's like a loose idea of things. Maybe there could be like further marketing strategy behind that, but I really feel like if you integrate the business, that could be really, really efficient and also just help net margins in like the long term of like everything. But I also want to say I don't think in the short term, when this does launch, that there will be a significant revenue increase suddenly. I think it's going to take time to scale and really just make things happen before you can see like a certain segment of revenue being like NFT revenue, for example, or whatever they want to describe it as, right? I don't think they're really going to use the word NFT. I would imagine not as much because that's just a name that's become so sour, right? When you hear NFT, the average person's like, "Oh no, those are so stupid. They're all scams." Blah 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 blah. Like, but if you just say, "Oh yeah, it's like your digital asset in this game," don't think twice about it, right? They don't think about it in that light. But yes, sir. Xbit, good to see you. Thanks for popping in. Gross margin over revenue. Yes, sir. DRS GME. I saw Larry Chang's tweet today. Good point. Let me pull that up real quick. And then back to the earnings. Because I always say, like, oh, yeah, I'm going through earnings history. I mean, not always, only second stream now. But you guys start talking and I start getting some ideas and we just start chatting. We just rock and roll. But I was going to reply to this, but I got busy at work, so I didn't even have a chance. So, yeah, I know. Shout out Badass Trader who say, yo, you got to hop in GameStop's or James. I like that is his name now, GameStop's Twitter space. And it was just tough because I was like literally at the office still. And, like, I still had a bunch of crap to finish. And really my job has been getting like a lot more busier. Like I'm trying to push myself forwards and, really just get to the next chapter of things. And there's some opportunity to grow there. So like I'm really going for it and really just trying to commit. So I don't want to seem like on my phone as much, and also just there's more I actually have to get done before I leave. So gross margin cohorts, but regardless, didn't get a chance to reply, but we can definitely analyze it right here. So gross margin cohorts versus, or is that how you say it? I don't even know, to be honest with you guys, revenue cohorts. So basically it just means though, gross margin improvement or strength of gross margin, or let's see what ChatGPT says. I actually did that when I was at work very quickly because I was like, sometimes I do grammar correct for my emails, like just as like a Grammarly type of thing, or like just see as like a reference point with ChatGPT before I send out like an email at work, stuff like that. But explain this just to get an idea because I don't know what cohorts means, to be honest with you. Likely refers to, and then let's see, cohorts definition. But I understand as a whole it means gross margins are more important than the actual revenue increase. Cohort is a group of individuals or entities that share common characteristic experience within a specified time frame. So improving gross margins over time instead of improving revenue over time is more important. That's what it seems like. Okay, so let's see. The phrase gross margin cohorts versus revenue cohorts is a comparison between two sets of data or groups of companies, specifically in the context of financial analysis, to break down what each part of the phrase means. Gross margin cohorts, this likely means a group of individuals or data points that have been organized based on their gross margin. Gross margin is a financial metric that represents percentage of the revenue a company retains after deducting the cost of goods from total revenue. So that means they'd rather focus on the higher margin items than just getting the most possible revenue. Maybe not GameStop specifically, but I think that's what that tweet means in reading this right here. They're more focused on selling higher margin items than just any items. That's what it kind of seems like here. Revenue cohorts, this refers to another group of companies or data points that have been organized or grouped based on their total revenue. Total revenue is the sum of all money a company earns from its sales of goods or services. Okay. means that a group of companies or data points organized by their gross margin is considered more important or significant than the group organized by their total revenue. In other words, the focus or priority in this context is on companies with higher or better gross margins than rather those with higher total revenue. Makes sense. Yeah. So, I mean, that was kind of what I was saying, but also just always like to, to me, like it's a second opinion, Chat GPT. Just the same way at work, if I'm typing an email and I'm like, Chat GPT, improve and grammar correct this email. I put it in there. I don't just blindly take what it gives me back. I read it, compare to what I have. I'm like, oh, yeah, actually, that's a better way to say that. Let me fix that up. Or, oh, actually, yeah, I don't even need this last sentence because it didn't include it. Or combined these two sentences to make it more direct. So I just use it as like a reference point, and same situation here. So to me, that's how AI is a cool tool in terms of ChatGPT and Bard, because it's just a matter of just like interpreting things and just, when you would sometimes turn to someone, hey, what do you think this means? Instead, you could just pop it in the computer and just kind of get it. It's like bouncing your own ideas. That's why I kind of like it. I look at it like dribbling my own ideas off the computer instead of dribbling my ideas off a person, if that makes sense. I'm not sure. But ChatGPT, I'm John Lacey. What's up, man? I know you like ChatGPT for sure. It's a great tool, man. It really is a great tool. Checking in, another thing. Good to see you. Hope you're doing well. Do you think software sales in Q3 will comparable to Q2? GameStop has been more focused on gross margins versus revenue, in my opinion. Yeah, you're absolutely right, dearest GME. And I'm not too sure. Honestly, I feel like I'd have to put more information together to kind of create a good thesis on whether or not we'd see some improvement in software. LOL, good. I remember when people tried to use it for legal research and ChatGPT recited a bunch of case law that did not exist and it was just making stuff up. LOL. Yeah, Trinidad. I feel like in the beginning, it was that craze where everyone was like, "Oh my god, I could just do everything for us. This is crazy. What a new world we live in. Where did this like magic machine come from?" Right? It was so funny in the beginning, and then I feel like over time, and maybe in the beginning I was trying everything, right? I'm like, let me just ask this thing anything and just to test it, right? And now, everyone's kind of, let's take a step back. It's situational. It really is situational. It's not like problems fixed. But from what I understand, I have a friend who had the higher version of ChatGPT. I forgot, he was doing some more intense stuff, and he said he was using it consistently in his company or something like that. But he was saying like it's crazy how much just smarter it's getting, which is scary to me, how intelligent AI is. But that's a whole conversation for a different day. Not even going to get into that. But margins, United States. Oh, wrong quarter. This is where we were. Margins in the United States, significant improvement for this quarter versus the same quarter of last year. And same thing when you look at the 6 months. Rest of the regions, they do have room to catch up for sure. But I think looking at the United States or prioritizing the United States as number one in terms of improvement is really, really important, because if you're looking at the United States in terms of percentage of revenue, it is the largest percentage. All right. So should we go line by line with the 10Q? Potentially. So I started highlighting some stuff here. And I feel like we mostly went through this. So I think maybe today's a day we're going to go through the 10Q really. So I've already touched on this. Let's go to the top. Let's get, I think, like more into the details here. So I do like how they're consistently showing 3 months and 6 months. I think, pretty much all companies do that, but it's really just nice to see it all over the place. So looking at the 6 months, which I want to focus on more because I feel like I'm usually focusing on the 3 months. So if you look at the first half of the year, they were able to actually accumulate $21 million in interest on their cash. And as interest rates continue to rise, as I personally believe they will, potentially, of course, think what you want about that formula, your own opinion. But if there's a situation where inflation is even staying like 3-4%, I feel like it's very likely we see interest rates continue to rise. And with the situation GameStop's in, where it has more cash and debt, they can benefit off of it. It's not the most ideal scenario if it's hurting consumers, right? And just not, helping the economy grow as a whole. That's not good for GameStop necessarily in the grand scheme of things. But if it's going to happen anyway, because they don't have control of it, they might as well accumulate on their cash. And by the way, this is just what they're earning on their cash and cash equivalents, because if you're in a situation where you have marketable securities that are treasury bills pay at maturity, which means very loosely, if it's going to pay you $100 at maturity, you pay $95 up front. And then 6 months later, you get paid back $100, right? So you never actually like register the interest on the actual income statement. Rather, when you look at the cash flow statement, it's actually the proceeds from marketable securities, where the proceeds would be greater than the purchased. Whereas interest income, as I understand it, is actually high yield savings, potentially a money market account where it's just paying out consistently. Let's see, yeah, always trying to check the chat, but let's keep rocking and rolling here. So looking at net loss, 6 months for 2023 versus 6 months of 2022, you have a near $200 million swing on the bottom line, which is just remarkable. And then you look at revenue is a near $115 million swing negative. So despite a decline in revenue, there's a greater net income increase, or there's an increase in net income, but a decrease in revenue. And that kind of plays to what you just said right here, right? Whereas gross margin cohorts over revenue cohorts. Damn, get mad dehydrated. Gotta hydrate up real quick. All right, back in business. So going through the cash flow statement here, settlement of stock-based rewards, so a little bit less, and then slowly repaying the debt as they took it on from the French government. At this point, it's 1% interest. It's one single loan associated with the French government's response to the pandemic. So what else do we have here? Anything else that would stand out? This is really, I know I keep saying this, I got to actually go through the cash flow statement more. I understand it, but I can't like cleanly speak off it like live. Like there's a, like an understand, and then there's a be able to explain type of understand. So same here with the stockholders' equity. This is something I have to revisit and be able to like efficiently talk about it. So not glancing by it because it's not important, but just trying to continue to moving on down here. And those are things where I have to further educate myself to truly speak on the well. But of course, I definitely encourage you to always look at them yourselves. So cash, if you look at cash for this quarter compared to the same quarter of last year, it is about the same. But if you look at it compared to the previous quarter, you see quite a bit of a difference. Part of it is the marketable securities. So just to quickly go back here, actually, there was more proceeds from marketable securities than purchases. Or I'm sorry, we would have to look at the 3 months ended, which on this one, they don't have it. Over here, they do. So for the 3 months ended for marketable securities, there's a larger swing. See, there's 50 million more purchased than those that actually matured in that period. So with that being the case, that made cash flow look like 50 plus million worse than it actually was, because it shows as more purchased than those that were actually matured, but still, just moving on the balance sheet essentially. But still, as a whole, if you consider cash relative to debt, I think they're in great shape. And also, if you account for all of the cash equivalents, and marketable securities, and divide it by the amount of shares available, it comes to nearly $4, if I'm not mistaken off the top of my head. I think I have it over here somewhere, but I believe now I had it in a different tab. Believe it's 3 and change at this point. But what up, badass trader? Good to see you. My bad, man. I was saying before I couldn't hop in the space because I was just getting more busy at work, and I've been staying later at the office, and it's just such a crazy time outside of YouTube. I can definitely say that. But I really appreciate the invite, and I'm gonna be hopping in spaces soon. So stay tuned. But did I put it down here? I think I had it per share, how much they had. No, maybe I didn't write it down. But their actual cash per share now is still, I believe it's like 370 last time I calculated, or maybe it's still close to $4, which is just a ridiculous amount of cash per share considering the current stock price. So just something to look at, and as the stock price continues to fall, just a greater and greater portion of the actual market cap is available in cash. And if they report another quarter just positively moving in the right direction, it's just really hard to believe with the amount of cash on hand and the direction the company's moving that the stock price stays this low. But at the same time, I say so be it. If you like the stock long term and you see where things are moving and how things are going, I think it's fine personally. That's my opinion, where it's like, all right, I'll just have a chance to accumulate and look at what of a value play this is that I have the opportunity to buy at good value. Whereas in the future, there might be other individuals that are starting to see it, and it's more so when things have come together and the train is really starting to push forwards, right? And the train is really picking up speed. Then that's a situation where people try and run and hop on, right? And they start chasing. Whereas if you see it prior to, a lot of people trying to get in, then you can ride that wave up just much more. Just generally speaking, right? For any stock. So all good, man. You have a lot of fans on there. Dude, I appreciate that, man. That's actually awesome to hear. Like, I'm just really a regular guy. Like, really never forget that. Like, I'm just a regular guy. Like, I'm not gonna say like, oh yeah, like I'm stupid. Like, I'm not saying that or something, but I'm just saying like I'm not that much, I'm really no different than any other person out here like that's watching this right now, I'm going to work each day. I'm just trying to figure it all out. I'm trying to balance this and that, and that's what everyone else is doing, right? That's the craziest part about life. Like, it's I was actually listening to a podcast today where they were talking about it's actually Spit and Chicklets, the hockey pod. I'm a huge hockey fan, so I was listening to talk about it, and this guy Ryan Whitney was saying he's like, he was once in a while you have to step back, and I don't know, they were going to like a tangent about I don't know. They were going to like completely off topic. This is not how they normally talk, so it just kind of hit like, damn, yeah. Hearing a guy like that say that, just he's like, sometimes you have to and he's usually like some very sarcastic stuff like that. So he's like, you got to step back because no matter how bad your life is, or like whatever bad things happening in your life, right, where you like something's like really a hard time or whatever it is, where I'm so stressed or I can't believe I'm dealing with this or that or whatever it is, if you step back and realize like there's somebody out there who has like a really tough situation going on, like something that they couldn't control, something like just absolutely horrible, like terrible disease or whatever it may be, where they were talking about a friend of theirs on the podcast, something very unfortunate. They had like pancreatic cancer and unfortunately passed away, something like that. So basically, where there's a lot of people out there that are fighting every single day, just to stay alive. So like they would kill to be in your shoes, like they would do anything to be you, and then in your head, in that moment, you're like, oh my God, like I'm so stressed about this and that in my life. But it's like when you step back and you have to step back and think about that sometimes. And when you do, you're like, damn, yeah, it's not that bad, right? It's not as bad as I was just thinking about it was like a few minutes ago. Like when you step back and have that. And I don't know. He was just talking about that. I was like, damn, yeah, that's a really good thing to just try and, remember sometimes. And, you just hear stuff like that randomly. Sometimes you're just like, damn, yeah, maybe I'm stressed about this or that, but it's like really like, damn, if I like in that next moment where I'm feeling like that, I'm gonna try and remember that and be like, it's not so bad. I'm gonna figure it out. There's your Tetron motivation for today. But yeah, so just figuring it all out. Cheers everybody, for real. Cheers all around. Just keep doing what you can for yourself. Like that's always number one. Like it's not selfish to put yourself first. But all right, enough philosophical talk. Let's keep moving on here. So let's get back to where were we? 10Q. So that's the change. And if you're curious, see exactly what is the cash and cash equivalents. Cash and cash equivalents are carried at fair value, consist primarily of cash, money market funds, cash deposits with commercial banks, and highly rated direct short-term instruments that mature in 90 days or less. Such investments with original maturity dates of 90 days or less are classified as cash and cash equivalents on our condensed consolidated balance sheets. Restricted cash consists primarily of bank deposits that collateralize our obligations to vendors and landlords. The following table presents a reconciliation of cash equivalents from restricted cash and our consolidated condensed balance sheet total. Okay, basically the same thing. So one, recognizing prepaid expenses in other current assets on our balance sheet. Okay, so I guess that's the restricted cash. And then long-term restricted cash, recognizing our non-current assets. Okay, makes sense because non-current is anything over 1 year's time. So investments, we generally invest our excess cash in investment-grade short-term fixed income securities, which consist of U.S. government and agency securities and time deposits. Such investments with a maturity in excess of 90 days and less than 1 year are classified as marketable securities on our consolidated balance sheets. All right, I feel like I've said that a million times now, but just one more reminder that it's not just anything that's marketable securities. They're specifically saying it's U.S. government and agency securities and time deposits. So basically, not things that are just, oh, it's maybe going to like yield. It's going to yield. So digital assets, we account for digital assets in accordance with ASC 350, intangibles, goodwill, and other topic 350. Our digital assets are indefinite lived intangible assets which are initially recorded at cost. Accordingly, in fair market value at any point during the reporting period is lower than the carrying value. An impairment loss equal to the difference will be recognized in SG&A expenses in our condensed consolidated statement of operations. Impairment losses cannot be recovered for any subsequent increase in fair value until the sale or disposal of the asset. So gains on the sales of digital assets, if any, will be recognized on the fair value upon sale or disposal of the assets and SG&A expenses on statement of operations. So if you're reading that, right, another example where you can use ChatGPT is you look at that, okay, that's a little wordy. Hey, can you explain this to me in simple terms? And to me, this is where it's a great research tool. You can just better yourself in reading the reports. Like, can you explain in simple terms? Yes, really. Cheers all around. For real, cheers. I love that, it's just always cheers in the chat. Certainly. Let's break down the simple terms. The accounting rule tells the company how to handle those digital assets. So in simple terms, the statement is saying that the company treats its digital assets indefinite-lived intangible assets, records them initially at their cost, and if their value goes down, they report that loss as an expense. They can't recover that loss until they actually sell or get rid of the assets. They sell the assets for more than they originally were worth. The report is a gain, but it's also treated as an expense in their financial statements. So if the value of these digital assets are falling down, then it's actually being recognized in SG&A. So that's something I wasn't even considering before and could potentially have been going on in the past. And then they can't actually recover it as the value is falling until the actual sale. That's what it's saying here. So if those digital assets recover in price, they don't actually even record that until they recognize it. It's on the actual sale. Let's go back here. So in January 2022, we entered into contractual agreements with Immutable X Party Limited, IMX, and Digital Worlds NFTs Limited. Pursuant to the company was entitled to receive up to 150 million in digital assets in the form of IMX tokens once certain contractual milestones have been achieved. Upon announcement, we achieved our first milestone under the agreement with IMX and recognized a 79 million non-current receivable and corresponding deferred income liability related to our entitlement to IMX tokens as of January 29th, 2022. Kind of crazy to think that was almost 2 years ago at this point. So really, Immutable has been building for a long time, and it's nice to see Robbie still consistently to post. That's pretty much the head of things, Robbie Ferguson, and just them still being consistent. That's really a big part of things. I feel like a lot of times you see a name like, oh, we're going to do these big things. Like they tweet about and do this, all, and that for like couple months and they kind of just fall off. But I feel like GameStop really picked a partner with them that really is committed in making their mission happen, and that again aligns with the interests of Ryan Cohen and just the company as a whole, where it just really wanted to push forwards and just work. All right, so during fiscal 2022, we achieved our second and third milestones under our agreement with IMX and recognized an additional 33.8 million of deferred income liability on our consolidated balance sheets. Deferred income is recognized over the term of the contractual agreement. We liquidated all tokens received under our agreements with IMX in fiscal 2022 and have no IMX tokens recorded on the balance sheet. So previously GameStop said, and this aligns with it, that they're not interested in holding actual cryptocurrency, or they've maybe not said it directly, but they've been very evident in that they don't actually want to hold the coins themselves in any shape or form. They just want to be facilitating things. And to me, that makes a lot of sense, and it just takes off a lot of liability, and it makes sense why they're unwinding the wallet. And it is unfortunate. I do still have to get my stuff out of the wallet, so that's your reminder also. make sure to move your stuff out of your wallet because GameStop wallet will be winding down. Make sure you have your backup phrase and, just integrate it into MetaMask or wherever you want to go, right? And just, do your own research on that. That's definitely something I still have to do my own research before I actually make the move. But don't forget to do that before they wind it down. And it sucks they are winding down the wallet, but in the big picture and the more I've thought about it, I think it makes sense because if it's going to be a legal liability in some shape or form, you don't want to be in a spot where you're having to spend a large amount of capital on lawyers and just in a legal battle. It's just annoying. It's a waste of time, energy, and it'll also just slow down their momentum to me. So it's unfortunate, and obviously, it's money wasted in hindsight. But I think relative to the potential issues that could arise, it's worth moving on. And also, I think with Web3 gaming, the more and more I think about it, for people to truly, truly adapt it, right? It has to be a situation where individuals want to play the games. The Web3 is just extra. And once they're already playing the game, they're like, okay, oh, this is a Web3 game? I didn't even realize it. Oh, damn, now I actually own this asset. And they become accustomed to it through the games. It's all about the games, right? It's about the experience. It's about the games. If the games aren't good, it doesn't mean crap that it's Web3. That's my opinion. And the more if I thought about it, that's just how I see it. So there has to be a way I think individuals can truly own their own assets, but without it being like about the Web3 and it being about the game. That's number one. So moving on here, we liquidated all the tokens. So that's as of July 29th, 2023. During the 3 months ended July 30th, 2022, we recognized $13.9 million in income in SG&A expenses on our condensed consolidated statement of operations. During 6 months ended on July 30th, 2022, we recognized a loss of $7.2 million on the non-current receivable, an impairment of 33.7 million on the digital assets, a gain of 6.9 million on the sale of digital assets, and deferred income of 27.8 million in SG&A expenses on the statement of operations. During the 3 and 6 months ended July 29, 2023, we recognized deferred income of 14.3 million and 28.6 million respectively. And SG&A expenses in our condensed consolidated statement of operations. Why did this put that? It's such a mouthful. As of July 29, 2023, the remaining deferred income liability to our related agreements with IMX was 28.7 million in accrued liabilities and other current liabilities on our consolidated balance sheet. So I do want to put that here because I had it previously, and this is something I have to organize. Still at that time, okay, so this was as of end of Q1 2023. So this is Q2 2023. So what we see here is, and then I'll put the actual number we had up here, which was, oh yeah, so I did have it before. Cash equivalents and marketable securities is $3.92 a share for GameStop right now. So the fact that it's at $17 and that much of the share per share is actually in cash equivalents and marketable securities, pretty remarkable. So we'll put that here. Boom. Okay. Million for Q2 2023. So this was, yeah, so completely separate. Kind of separate out a little. So you could see the improvement year over year for SG&A, and then this is for the same, not the same quarter of last year. Last quarter was 43 million still left on there, and now it's 28.7. So that's about 15 million of it, right? So that tells me it's probably about 2 more quarters, right, for this to finish coming off the liabilities. So 2 more quarters, most likely. Q3 and Q4 2023 of liability still existing for IMX. So the agreement seems like it was a 2-year agreement, right? If they enter the agreement in January of 2022 and it's now nearing the end of 2023, and we're looking at information that is as of the end of July 2023, That's what it looks like it's shaping out to be, a 2-year agreement. So that'll be a liability that won't be there anymore. It'll no longer be part of SG&A. Oh no, did I just lose my spot? Oh no, this is not where I was. But we'll circle back. And again, I'm going to pop this in ChatGPT because there's probably pieces of it I misunderstood and could further understand. Clarify this, or let's say explain. So you don't need to move anything if you don't want to. Just ensure you have your phrase. You can recover your stuff that way with any compatible wallet. Banana Hands, thank you for being here, and thank you for saying that. You clearly know much more than me on the topic, so I'm definitely going to have to do that. So you don't need to move anything if you don't want to. Just ensure you have the phrase. You can recover your stuff that way with a compatible wallet. Gotcha. So pretty much you can put the phrase in, right? And then you would be able to integrate everything automatically, just not in the GameStop wallet anymore. My ETH and my GameStop wallet is currently staked through my Loopring wallet. Do I have to unstake my Ethereum before I can send my Ethereum from my GameStop wallet to my Loopring wallet? That's a good question, Freshmaker. I would think not, but definitely don't take that from me. That's definitely, I would recommend something looking into more, because I feel like it's maybe a technicality that I'm not aware of, but I feel like generally probably not. But again, I don't know. That's something I would have to look into more, because actually, come to think of it, I do have a little bit of like a loop ring. I think it's a loop ring Ethereum pair, or no, I don't think I have my loop ring staked anymore because I don't have a lot of loop ring. I have a very small amount, but I have some Ethereum that's staked through the actual like loop ring website, or loopring.io. Okay, so let's break down the statement step by step. They entered the agreement in January 2022. Agreements with IMX and Digital World's NFTs. So in 2022, the company made contractual agreements with them. The agreements allowed them to receive up to 150 million worth of IMX tokens. However, the tokens were not immediately received, but were dependent on certain milestones being achieved. First milestone achievement achieved first milestone as of the date. So that's not exactly right, but that's fine. Still gets the point. As a result, the company recognized 79 million in non-current receivable money to be received in the future, and corresponding deferred income liability money owed to others but not yet paid related to the entitlement of IMX tokens. Second and third milestone achievements. And first, we'll quickly circle back here. These agreements allowed to receive up to 150 million. So if that 150 million, right, those tokens are falling, which the price of IMX has fallen, as it's falling, if they're recognizing that, right, in SG&A, that would be making it look worse than it is. And I would have to kind of fully try and piece this together, maybe as we get down here. Yeah, let's read a little more before I try and fully say what I'm saying here. Make sure I understand it correctly. During the fiscal year 2022, the company achieved its second and third milestones in agreement with IMX. This led to a recognition of an additional 33.8 million in deferred income liability on their financial statements. So that's 33.8 million plus 150 from what I understand. Recognition of deferred income. The deferred income liability represents the amount of money that the company owes to IMX based on the milestones achieved. Deferred income is recognized gradually over the term of the contractual agreement. Liquidations of tokens during the year 2022 received the IMX tokens and subsequently sold or liquidated them. As of this most reporting date, the company no longer held any IMX token assets on its balance sheet. Impact in 2022, during 3 months of July 30th, 2022, the company recognized 13.9 million of income as part of SG&A expenses in its financial statements. Additionally, during the 6 months ended July 30th, 2022, there were various financial impacts, including a loss on the non-current receivable, impairment of digital assets, and a gain of single-digit deferred income recognition affecting all SG&A expenses. Financial impact: the company continued to recognize deferred income on its SG&A expenses, totaling 14.3 million and 28.6 million, respectively. So, as this liability is coming off the balance sheet, if I'm reading this correctly, it's being charged to SG&A. Let's see if ChatGPT can respond to that, because this is where, maybe you hit a wall with ChatGPT. It's not always 100%. Does this mean that the company is recognizing, as the liability is slowly coming off the balance sheet, that it is being recognized in SG&A? I don't know why my brain just stopped working for a moment there. Let's see what it says. Yes, and the statement provided indicates that the liability related to the deferred income is recognized in SG&A expenses as it gradually comes off the balance sheet. Here's how it works. Deferred income liability, initially when the company enters an agreement to receive future payments or benefits, in this case IMX tokens, that they have not yet earned or realized, they record a liability on their balance sheet. This is called deferred income or deferred revenue. Recognized in SG&A expenses over time as the company meets the conditions or milestones specified in the agreements, they recognize a portion of deferred income as revenue, and in this recognition is typically spread out over the term of the contractual agreement. The portion of deferred income that is recognized as revenue is then recorded as an expense in the SG&A category on the income statement. So as the liability is gradually recognized and comes off the balance sheet, it simultaneously impacts the company's income statement by increasing SG&A expenses, which reflects the cost of earning the deferred income. The recognition in expenses reflects the company's ongoing performance and fulfillment of its contractual obligations related to deferred income. So I want to read that last part again. So as the liability is gradually recognized and comes off the balance sheet, it simultaneously impacts the company's income statement by increasing SG&A expenses, which reflects the cost of earning the deferred income. This recognition expenses reflects the company's ongoing performance and fulfillment of its contractual obligations related to deferred income. So that tells me, SG&A will be lower in 2024. And if you see, it was 14.3 million and 28.6 million respectively. So 14.3 million for this quarter, and then not just 28 in the next quarter, it's 28.6 million total. So 14.3 million per quarter. And if that's the case, if you look at SG&A and you actually subtracted 28.6 million, or where did I want to go? Let's get to the regions again. But let's go back up here. So 28.3 million. Backing up. Or where were we for the regions? Maybe we weren't there yet. Come on. Nope. Here we go. No, not the regions. Okay. I'm confusing myself now. So back to the income statement. That's what I wanted to do. Or if you just consider this, right? If the 53.3 million, and then you take out that 28.6 million, they really would only be 25 million negative, right? And for this quarter, they would have been profitable if it wasn't for that. So my point being, in 2024, that will definitely impact things, and it will help them have a stronger bottom line because that deal will be up. And, to me, this is a great example of using ChatGPT as a research tool because I was able to explain that much better than I initially would have been able to. Yeah, I'm getting so warm today. I'm going to have to go put on the fan real quick. Hold on one second, guys. Be right back. All right, back in business. Whew. Yeah, starting to sweat. Too much yapping away. I dropped my water over there. Whatever. I thought I left it behind the computer, but we're chilling. So, already talked about the investment section, and now I've gone through the digital asset section. So, this is in accordance with ASC 350. From what I understand, is a newer rule. Explained, just to briefly put it up here. True. Yours, thanks for being here. Hope you're doing well, man. Good to see you. ASC 350 stands for Accounting Standards Codification Topic 350, which is a specific accounting standard issued by the Financial Accounting Standards Board in the United States. ASC 350 covers the accounting treatment of intangible assets other than goodwill. Here's an example. Tangible asset definition is non-physical assets that lack substance that have value. Examples of intangible assets include patents, copyrights, trademarks, customer lists and software. Recognized as intangible assets. Companies are required to put them on the balance sheet if certain conditions are met. The conditions include if the asset is identifiable, meaning it can be separated from the company and sold, transfer, license, which does, or the asset provides future economic benefits such as generating revenue. The cost of the asset can be reliably measured. Immutable X tokens fall completely in that category. So makes sense why it would fall into that, but just for more knowledge there. But let's move on to the next section here. So during 2022, we launched beta versions of our non-custodial digital wallet and peer-to-peer function NFT marketplace enables purchase, sales, and trades of NFTs. Revenues related to the our NFT digital asset marketplace, digital wallet and marketplace are recognized in our net sales and our condensed consolidated statement of operations. Revenues earned in our digital asset wallet and NFT marketplace were not material to the condensed consolidated financial statements for the 3 to 6 months ended July 29, 2023. I've seen people highlight this section of it before in previous earnings reports and be like, oh yeah, see, it's not even like worth highlighting. It's so stupid what they're doing with it. It means nothing. It's not making them any money. That's why they're not even highlighting it. I think it's just a piece of the puzzle in the long-term game. And number one is improving their core business operations, right? Just continuing to push forwards in improving the items they're selling, right? Focusing on margin, higher margin items in the stores and just being sold online and just keeping profitable stores open. If a location's not profitable, it can't operate, right? Or if it's not going to be profitable, it doesn't make sense to keep it open. So during the fourth quarter of 2022, we committed a plan to sell our property in Europe, in a Europe segment consisting of a warehouse building, land, and other property and equipment with a total net carrying value of $7.1 million as of July 29, 2023. And in April 2023, the company entered into agreement to sell the warehouse building and land for approximately $13.1 million. The transaction closed in August 2023. So previously, they had said, and I made a note of it here, that they were expecting it to close, page 1, expected to recognize a $6 million gain in Q3 for the sale of the European land and property, which is the warehouse and land. And now we see here, put to the end here, that they actually did recognize it, and it's not in this report because it says it closed in August 2023. And keep in mind, this report is as of July 29th, 2023. So something to consider is that $6 million gain will be recognized in the next quarter. So if you think about it, that would theoretically mean, right, that this quarter would have been profitable if you consider if it would have happened the last quarter. But I don't know if it would fall under that exactly. Let's see. Company during the first, carrying and to agreement sells for $13.1 million. See, I'll ask ChatGPT right here. Okay, where will this show up on the financial reports of the next quarter? Let's see if we can answer that. Where will it show up financial reports for next quarter relative to the $6 million gain? Sale the properties such as the warehouse building and land will typically reflect it in the company's financial reports in a few different ways in the next couple quarters. Here's what will be recognized. Income statement, profit or loss, difference between the sale price and the carrying value of the property will result in a gain on the sale. It can be included in the company's income statement for the next quarter as part of the total revenues or a separate line item, typically under other income or gain of sale of assets, not digital assets, not talking about digital ones anymore. So keep an eye out for that. So, theoretically, if the transaction did close in Q2 2023, they would have actually turned a profit. That's all I was going to kind of say. Not that that matters because it's going to be recognized anyway. It's just a matter of 1 month for where it's actually recognized in the financial reporting, but it still is in 2023 as a whole. So going back here, during the first half of 2023, we committed to a plan to sell additional properties in our Europe segment consisting of buildings and land with a total net carrying value of $9.6 million. There were no impairment charges recognized on these asset groups as the estimated fair value exceeded their respective carrying values. So they committed to a plan in the first half of 2023 to sell additional properties in Europe of different buildings and lands with carrying value of 9.6 million, but there's nothing that's going to be recognized nothing recognized because it's not exceeded their respective carrying values, meaning as it's fallen, from what I understand, and I've previously been researching and looking through here, as the value of the carrying value of this specific European segment has fallen, it's being recognized in SG&A, and in their sale of it, there is no gain to be recognized. It was recognized as it was falling down, and then the carrying value will come off the balance sheet. Building, land, and other properties and equipment are classified as assets for sale and other non-current assets on the balance sheet in July 29th, 2023. So this is the revenue section. Let's look at 6 months. I feel like I've looked at 3 months a bit. So obviously, hardware has been sideways. We saw significant improvement in software. I know someone asked before. We're going to see that again, potentially. We'll have to look into it more. We'll have to kind of think about it more. Sales of new and pre-owned gaming software, digital software, and PC entertainment software. And then hardware and accessories is sale of new and pre-owned hardware, accessories, hardware bundles in which hardware and digital or physical software are sold together in a single SKU, interactive game figures, strategy guides, mobile, consumer electronics. And then collectibles, I think it speaks for itself. Really want to see more improvement in collectibles because they're generally higher margin, but also, I think margins just have to improve across the board. We have arrangements with customers where our performance obligations are satisfied over time, which primarily relate to extended warranties and our GameStop Pro Rewards program, formerly known as Power Up Rewards, and our GameStop Pro Rewards program includes a subscription to Game Informer magazine. We expect to recognize revenue in future periods for remaining performance obligations we have associated with unredeemed gift cards, trading credits, reservation deposits, and loyalty points earned as part of GameStop Pro Rewards program. Collectively, unredeemed customer liabilities. That's where it is. For at the time, when there's a gift card outstanding that hasn't been spent, it's under unredeemed customer liabilities. They're all the gift cards out there, right? Stuff like that. Or trading credits. We offer extended warranties on certain new and pre-owned products with terms ranging from 12 to 24 months depending on the product. Revenues for extended warranties sold are recognized on a straight line basis over the life of the contract. Revenue subscription in Game Informer magazine, including the GameStop Pro Rewards program, are recognized on straight line basis over a 12-month subscription term. Okay, so if I'm reading that correctly, that would mean that GameStop Pro, the $25 a year you pay to be a GameStop Pro member, is recognized over a 12-month period, which means it's about $2 or so, $2 and a couple pennies are being recognized each month, so to speak, in terms of how they're reporting it as revenue, if I'm not mistaken. Let's see what ChatGPT has to say about this one. Clarify this. And it's so crazy how long the 10Q is. I mean, I obviously can't get through everything today. 267 pages. But like when you really go through, there really is so much detail. So that's really why I'm trying to go, line by line. There's just always more to learn. That's like the craziest part. So revenues for subscription to Game Informer magazine refers to the money that the company from customers who subscribe to Game Informer magazine. No, let's just see. Approach aligns with the accounting principle of recognizing revenue when it's earned and it's being delivered to the customer, ensuring an accurate presentation of the company's financial performance over time. Let's say a customer subscribes to Game Informer magazine for $120 a year. Instead of recognizing a full $120 revenue immediately, the company would recognize $10 revenue each month for 12 months of the subscription term. This way, the revenue is allocated over the subscription period, reflecting the customer receiving the magazine through the year. Okay, so they're saying it to the magazine, but it gets the point across that GameStop Pro is $25 a year, but it's being recognized monthly. So I won't put that on my notes here as I sort this out at some point. GameStop Pro revenue recognized on a quote straight line basis. Essentially $2. Well, let's just do the math. 25 divided by 12, $2.833, excuse me, per month, recognized as revenue. Say GameStop Pro is $25. So previously, with it only being $15, it would have been 15 divided by 12. They're only making $1.25 per month per rewards member. Now they make $2.08 per month per rewards member. And honestly, maybe going into 2024, you raise the price of pro membership. I don't think, anything crazy. Maybe just to 30 or 35, but put even more in there, right? Make it even more incentivizing and even more worthwhile to be a pro member. That's a thought I have here, just off the dome. Potentially, like if they were saying doing something I was kind of talking about before, and I've said it in previous streams, videos, whatever, that I see an opportunity to vertically integrate their Web3 business with their stores and just online presence of e-commerce. If you can make it so that going to a store, you scan a code, gives you something in a certain game, or you're online and it tells you like go to your local GameStop and you get this, and every local GameStop, right, has a different type of item, or all the GameStops around, certain GameStops have like a certain item in a certain game, and you just basically kind of incentivize people going to the store, and then in the store you can advertise for what is online. So if you're vertically integrating GameStop's business model as a whole, I think the pro membership program also is an excellent way to kind of tie everything together, because if you're using your GameStop Pro account for GameStop Player, that would be pretty cool, right? Because everything you have with GameStop would already be integrated. Imagine a situation where you could theoretically just be shopping in the GameStop Player client on GameStop.com, and your everything is already in there because it's actually your GameStop Pro account. I mean, that's just a wild thought I had right now. But regardless, if they're gonna raise the GameStop Pro price revenue, the price of GameStop Pro, I think you have to raise the value for the consumer. So something to look out for potentially. But let's keep going here. So unredeemed customer liabilities, extended warranties, subscriptions. Briefly talked about that there. That's pretty much, unredeemed gift cards, things like that. And then the warranties, are the warranties that are associated with, you buy a product and say, oh yeah, I'll take the warranty on that in case something goes wrong. Subscriptions would that be the GameStop Pro? No, I guess that would be. Let's see. Recognize revenue in future periods for remaining performance obligations we associated with unredeemed gift cards, trading credits. No, okay, now I'm losing myself here. Okay, yeah, subscription term, yes. So this is what they're making from GameStop Player. So if they're making 40.5 million this quarter, is this as of 6-month period? So if this is a 6-month period and they have the same amount of GameStop Pro members at the end of the year, theoretically that would be $81 million they're making off GameStop Pro. Whereas if this is quarterly, then it would be 160 million. So we accrue loyalty points related to our GameStop Pro rewards program at its estimated retail price per point, net of estimated breakage, which can be redeemed by loyalty program members for products we offer. The estimated retail price per point is based on actual historical retail prices of retail purchased through the redemption of loyalty points. We estimated breakage of loyalty points and unredeemed gift cards based on historical redemption rates. Makes sense, pretty straightforward. Contract liabilities. The contract liabilities consist of unredeemed contract liabilities and deferred revenue associated with gift cards, extended warranties, and subscriptions for Game Informer magazine as part of the GameStop Pro membership. So the increase was 320 million, and then decrease 370 million. So net 286. And then 1, the issuance of the gift cards, the new points. And then 2 is actually points being redeemed. So this is how many points and gift cards are essentially like being issued in the quarter. And then this is how many are actually being redeemed. And then this is how many are outstanding, like all together. So that's kind of how that breaks down. So this is actually the 6 months, these numbers. So it seems like this is most likely also 6 months. So they're probably making $81 million a year on GameStop Pro. Let's see. Prox 81 a year on GameStop Pro. We can actually check that real quick. We'll put the full word, approximately. Yeah, because if we just look at the about, so on page 11 here, let's see, Subtetron, SubXbit, Scott, you owe Kyoto an apology. Uh-oh, beef in the chat, but yo, hope you're both doing well, Xbit, Scott. So let's get to the amount of GameStop Pro members. Might take a minute here to find it, so stick with me. Let's see if we can locate it. I want to see the exact amount of Pro members. Let's see. Really, that's it? Membership or loyalty. I'm not sure where it is, but usually it says it on here, the exact amount of customer or GameStop Pro members that there actually are. And then also, if you ever want to see the exact current breakdown of the U.S. government securities, and also they have time deposits, which I'm not as familiar with, and previously they didn't. Time deposits are newer investments for them. I'm not sure the technicalities of it, but I also do believe it is a nice, safe investment as far as I'm concerned. Like it's still recognized under marketable securities. What is a time investment? Or what was that? Is that what it said? Time deposit. What am I saying? Time deposit. When I start saying random stuff, I'm like, okay, this is probably the point where I'm starting to like burn out on the stream. What is time deposit? Kyoto, the dude that doesn't understand share owner rights and the anti-DRS are honestly exhausting. Not worth my time to try anymore. Thanks for the heads up, though. He can hit me up if he wants. I'm readily available. Kyoto, the dude who has been in the market for any of us sport. Yes. Yeah, no, I mean, I see both sides. You know, for me personally, I like having shares directly registered, but you know, part of what I was saying kind of before too. You know, it's all about individuals and wanting to make their own decisions. And, you know, definitely good for debate, but I think that, you know, there's some points where some people have to agree to disagree type of deal. But there's definitely, you know, lots of definitely strong opinions. You know, because definitely I feel like, you know, Kyoto's well known, definitely in Morance's chat for sure. He's been there for that long. That's not my job to educate him. Yeah, so all love though, all love all around, right? But yeah, no, it's always, you know, that's also part of life though, that it's like there's going to be individuals with differences, right? That's just how it goes sometimes. But that's all right. So time deposit is commonly known as a certificate of deposit. Savings account offered by banks and financial institutions. It differs from a regular savings or checking account in several ways: fixed terms, high interest rates, fixed interest rate, low liquidity, safety. Consider low risk investments because they're typically insured by government-backed programs. FDIC makes sense. It's not fluctuating. Automatic renewal. So if you don't withdraw the funds when the deposit matures, the bank may automatically reinvest the principal and interest into a new time deposit within the same term. A specific savings goal, commit to leaving their money untouched for a set period. They are considered a way to earn interest on savings while preserving the principal amount. However, because of their limited liquidity, they may not be suitable for emergency funds or those who might need access to their money at the time. So to me, what it just sounds like is a slightly more complicated marketable security, but it doesn't sound exactly like a CD. But regardless, it still falls in the same category here. And moving on, assets that are measured at fair value on a non-recurring basis. Assets that are measured at a fair value on a non-recurring basis relate primarily to property and equipment, operating lease right of use, ROU assets, and other non-intangible assets, including digital assets, which are remeasured when estimated fair value is below its carrying value. When we determine that impairment has occurred, the carrying value of the asset is reduced to its fair value. Fair value of digital assets held are based on level 1 inputs and described above, and impairment losses for digital assets cannot be recovered subsequent to increase in fair value until the sale of disposal of the asset. Kind of what we were saying before. Let's see, where was that? Level 1 inputs. Okay, let's see. Is it further up here? Not exactly sure what it means on that. I'll have to circle back there. But to keep moving on here, then honestly, guys, I think I am going to wrap it up soon because I feel like it's that burnout phase where I'm just not as sharp as I was in the beginning of the stream, but it's all good. Let's keep powering through. So July 29, 2023, our government guaranteed low interest French term loans due October 2022 through October 2026. The French term loans had a carrying value of 34.6 million and a fair value of 29.4 million. The fair value of our French term loans were estimated based on a model that discounted the future principal and interest payments at interest rates available to us at the end of the period for similar debt of the same maturity, which is a level 2 input as defined by the fair value hierarchy. During the 6 months ended July 30th, 2022, we recognized impairment charges of 33.7 million associated with digital assets and SG&A expenses in our condensed consolidated statement of operations. These charges were recognized in the United States segment. So we recognize impairment charge of 33.7 million with digital assets in SG&A. So that was for 2022. In 6 months of 2020, 6 months ended July 3rd, 2022, recognized impairment charge of 2.5 million associated with certain store level intangible assets to reflect the fair values in our consolidated, I gotta stop saying that, just statement of operations. These charges were recognized in our Europe segment. Carrying values of our cash, restricted cash, net receivables, account payable, and current portion of our debt approximate the fair values due to their short-term maturities. Okay, so that's just some general information. Assets measured at fair value on a recurring basis. Kind of further touching on that. The debt we talked about previously, to go over real quick. Total debt outstanding includes 11 million, 8.9 million, and 10.8 million of short-term debt as of the end of the most previous quarter, and which represents the current portion of the French term loans. Okay, during our French subsidiary, Micromania, and 6 separate unsecured loans totaling 40 million euros, second quarter of 2021. The request of Micromania, that's what was the name I couldn't remember before. These term loans were extended to 5 years with an amortization plan of principal starting in October 2022. In connection with the extension, the interest rate increased from 0 to 0.7% for the 3 term loans and 1% for the remaining 3 term loans. French government has guaranteed 90% of the term loans pursuant in state guaranteed loan program because of the pandemic. So just little details there. Letter of credit facilities. We maintain commitment to our credit facilities with certain lenders that provide for issuance of letters of credit and bank guarantees, at times supported by cash collateral. As of July 29, 2023, we had approximately 13.6 million of outstanding letters of credit and other bank guarantees under facilities outside of our $500 million revolving credit line, which matures in November 2026, of which 12.5 million are supported by cash collateral included in restricted cash. From what I understand about this, pretty much that's just so with their suppliers, they could say, hey, we're going to pay you. If there's some time in between, it can be basically insured, so to speak, by this credit line. I don't know the specifics of this, but basically this revolving line of credit allows them to, be purchasing inventory and not just it's not just straight cash out of the pocket, or there's time in between. This credit, revolving line of credit, is used to kind of facilitate it, if that makes sense. While terms are maybe being finalized, or while they want to confirm quality, but when it arrives, I don't know the exact specifics to it, and something I have to become further educated on, but that's how I generally understand it. In the ordinary course of business, we time from time subject to various legal proceedings, including matters involving wage and hour employee class actions, stockholder actions, and consumer class action actions. We may enter discussions regarding settlement of these and other types of lawsuits, and may enter settlement agreements in which we believe is the best interest of our stockholders. Do not believe that any such existing legal proceedings or settlements individually or in aggregate will have material effect on our financial and results in operations or liquidity. So that's just their disclosure saying we're not in any lawsuits right now. We don't expect any lawsuits popping up, and we're not dealing with anything that's worth mentioning where it's taking a huge portion of our cash. So just kind of legal stuff there. But, there's a lot of details in this whole report, and I feel like I gotta, maybe get some more pages specified that I want to go over. So, and also I'm kind of burning out here. So I just want to wrap up, touch on a couple things. Just, it's funny how the articles talk about things. So I just figured, why not? But let's see the chat real quick. I think it's under GameStop Pro subscriptions. Yes, Calvin, you were right. It took me a minute there, but I got there. Which means they have comparable identical assets in actively trading markets to their assets and use those values to compare carrying values in determining whether a write-down is needed. And good evening, Tetron. Hello. Thank you very much. Yeah, but like I was saying just now, burning out a little bit, but just seeing towards the end. Why are you streaming during Dumb Money? You're making me FOMO. Oh, Dumb Money drops officially today? I didn't even realize exactly what it was, but thank you, Tetron, for the stream today. Scott, thank you very much. Yeah, we'll just quickly touch on this article. It's just funny how it says it. Like the information on GameStop is just never simply correct, right? Like this one, I'll save for a different day. But 25 of the biggest Web3 companies in the world, and they have GameStop in here, and it's just like, yeah, they own. Like if you read what it says, GameStop is a significant player in the Web3 marketplace. The company is renowned for its Web3 games, including Overworld, Undead Blocks, and Keyreverse. Immutable X is a leading layer 2 Ethereum scaling solution that is now available in the GameStop NFT marketplace. Immutable X by GameStop Corp is used to build Web3 games to facilitate NFT trading. So I guess they're just saying like the Immutable X works with GameStop, but it makes it sound like Immutable X is owned by GameStop, and it just makes me think like articles like this are literally like written with ChatGPT 4.1 or whatever like the newest version of it is. So, but is Dumb Money out right now? Is that what it is? I didn't even realize. And I guess we'll go through this one real quick because it's just funny. Spoiler alert, they end it, they go through the whole history of the GameStop saga, but going back is funny, right? Where, oh, it's over in March 12th, 2021. Like, that's the end of it. But let's quickly go through it here. But is Dumb Money, like, I want to see the release date of Dumb Money. I didn't even realize, is it today? Damn, my freaking contact's drying out. I need to get eye drops again. I hate when this happens. It's also because now I got the fan blowing on me. So it's just drying my eyes out. But Dumb Money, release date 15th. Oh yeah, so 2 days. Should I go for like the midnight premiere and should I like record it? Oh no, it says it's out tomorrow in theaters near me. I don't know. Maybe I'm confused here. I'm not too sure, but thank you for being September. Good to see you. So let's quickly go through this. The Streets article, the timeline of the GameStop short squeeze saga, and of course, as if the saga's over, right? As if this wonderful saga that is GameStop has come to a close. Personally, I don't believe so, but let's read through this for fun. GameStop, a video game retailer known for operating stores out of malls and shopping centers, was the go-to name in the game and console sales industry in the aughts. Once a favorite mall stop for America's youth, teens, and game-oriented adults, by the mid-2010s, the retailer began to lose both cultural relevance and market share as shopping mall traffic waned and more of the gaming industry's customers began to opt for online purchases. By the end of the decade, GameStop's business was struggling, and it showed in the company's stock price. Hedge funds, and other large institutional players in the market had already begun to bet on the retailer's demise, causing its stock price to dip below its per share book value for much of 2019 as short selling drove share value downward. When the COVID-19 pandemic shut down much of the retail economy in early 2020, it seemed GameStop's fate was all but sealed. Over the next year, however, something unprecedented happened. A new generation of retail investors, armed with pandemic stimulus money, unemployment checks, and lockdown free time, put their resources to a collective attempt to take advantage of the company's low share price and high short interest. By late January 2021, GameStop's price skyrocketed to a pre-market high of over $500 per share in what was perhaps the most notorious short squeeze in stock market history. Some would argue that it would be Volkswagen and its chaos, and that was like just in a heartbeat. Everyone was literally trying to buy shares in one moment, and there's all the memes now, all reliable, and it's like the SpongeBob meme, and it's actually just like the Volkswagen chart, like we are here. Like every time a stock goes down, or every time GameStop went down for a while, it would be like we are here right before the big move, right? And now it's just a long-term game at this point, right? And I do like that they actually disclosed that it's a 4-for-1 stock split, but they gotta add at least a tiny bit of valid information in there, right? So June 1st, 2019, GameStop stock closed at around $7.47 per share. Mid 2019, Michael Burry's private firm, Sycon Asset Management, Sycon, I don't know how to say it, purchased over 3% of GameStop's outstanding shares, believing the company to be undervalued. Bloomberg reports that GameStop short interest stands at around 57.2 million of 90.2 million, meaning that 63% of the company's outstanding shares are currently sold short. August 16th, 2019, Michael Burry personally addresses GameStop's board of directors in a letter stating that the firm owns 2.75 million shares, or about 3% of GameStop, that his firm owns. Burry expresses concerns regarding capital management and urges the company's leadership to continue to use cash to complete large stock buybacks in order to increase the company's earnings per share. So, Michael Burry, they say he's predicted or what is it? He's predicted 100 out of the past 3 market crashes. In the sense, there he's said a lot of times, like, here we go again, right? And he did accurately predict 2018. I'm sorry, 2008. And I do believe he is an intelligent individual. And, there's been moments where he's wrong, but this is a situation where, we look back and when you see that Ryan Cohen decided to wipe out the entire board upon his entry into the company, Ryan Cohen was not even the first one to say that the company's leadership was slacking in terms of their capital management. He was not even the first person to write to the board of GameStop. Michael Burry actually did first, and that's really like the early days of the saga, so to speak, right? So he encouraged large stock buybacks to increase the EPS, which absolutely made sense at that time, especially with the valuation beat down the way it was and the stock being aggressively as shorted as it was at that time, pre the whole chaos period, right? So August 30th, 2019, GameStop stock closed at $397 a share. September 30th, 2019, by the end of 2019, third fiscal quarter, the company had repurchased and retired about 34% of his outstanding shares, which is just a remarkable amount of shares to buy back, right? And that's how the percentage of short interest increased so largely, from what I understand, is it was the repurchases of GameStop at that time, because it just pushed, shorts not wanting to close. It just pushed their percentage higher and higher and higher until all of a sudden it was over 100%, right? It's like, hey, wait a minute, how does that happen, right? And you know what's crazy? I can truly say I remember before 2021 where I looked at GameStop in like late 2019 or 2020 because I always just looked at random stocks, right? And I remember thinking, how could a stock be shorted over 100%? Like, I saw it and I thought, I don't know, but I don't know that much about GameStop. I don't know what they would do. Yeah, whatever. Just kind of crazy. Like, I didn't look that deeply at it. Also at that time, keep in mind, as I was saying previously, and I've said many times, I'll say it again, I was always chasing the next big thing at that time. I was a big time trader, always trying to catch the next big move, the next big thing that was happening, right? Whatever the move was, I wanted to be in it. So I didn't see it prior to, the hype of it. And then also now I'm in completely different shoes than I was in 2019. I've gained a lot of maturity as an individual and definitely within the stock market. So at the end of 2019, GameStop stock closes at $6.08. So even all that share repurchasing, it didn't even move the shares that much, which tells me it was also just being sold off by institutions and just continuing to be shorted even as they were repurchasing shares. Then July 2020, Keith Gill, aka Roaring Kitty, aka Absolute Legend, begins releasing YouTube videos explaining that he has held a position in GME since mid-2019, around the same time Burry bought into the company, and believes the company is undervalued and overshorted. Gill makes the case on Reddit's r/Wall Street Bets as user/deep fucking value. That was his other AKA. Deep Value, Roaring Kitty, Keith Gill. What a legend. Hope he's doing well out there, for real, for real. But that's when he started posting about it, and I remember it's so funny, like looking at the old posts. It's like, oh, I wonder where that GameStop guy is, right? And Wall Street Bets, like they used to like refer to him as that in the beginning, and then obviously tides changed very, very much. By the end of August 2020, closed at 668. End of November 2020, Ryan Cohen, an activist investor best known for his former role at Chewy as the CEO, an online pet supply retailer, had purchased over 10% of GameStop's outstanding shares. So he was acquiring shares leading up to November 2020. It wasn't necessarily just all like that. It just had to be reported once he became a beneficial owner. Once he's over that 10% threshold, he had to file that he actually was a majority shareholder. So at that point, the end of November 30, this comes out, GameStop closes at 1656, right? So obviously it's made a large move since August 2020. And also keep in mind that in early 2020, we're dealing with a pandemic. We're dealing with a very uncertain time for the economy, and all stocks were just absolutely crashing initially, right? It was just an absolute wild west of the stock market at that time. It was just completely tanking, and then it was just completely running up, down, like with so much volatility in that time period, right? And so many new people starting to get online and trading, right? And GameStop hosts its Q3 earnings call. Company misses their Wall Street revenue estimates due in part to the pandemic store closures and reports an adjusted net loss of 53 cents a share, causing shares to slide in after hours trading, right? So it seems like it fell off, like, oh, it's over. At some point in Q4 2020, it actually exited its position from GameStop. So you have to keep in mind they were in it way earlier back here, kind of kicking off the saga, so to speak, right, in mid 2019. And from their perspective, they probably doubled their money in a 1 year period. And I don't think really anybody could have predicted January 2021. And also, I believe that's why the buy button was turned off, because truly nobody could have predicted that unprecedented event of just so many individuals all at once buying a stock, right? Truly crazy. At some point, Q4 2020, Michael Burry's Sycon Asset Management exited its massive position in GameStop according to regulatory filings. January 4th, 2021, stock closes at the first day of January, trading at 17.25. So it's still roaring forward at that point, and that's really where the online traction is picking up. January 11th, 2021, Ryan Cohen, the activist investor who owns over 10% of GME stock, joins the company's board of directors, along with Alan Adel and Jim Grube, two e-commerce specialists who also used to work for Chewy. So at that point, that's when he starts to make his presence known on the board. Look at that absolute stud there. January 13, 2021, GameStop stock jumps to an intraday high of 38.65 on the news of Cohen and Company's appointments to the company's board. So then it starts to become very picked up on social media, right? He starts to get posted about a lot. Citron Research, predominant GME short seller, tweets that GameStop's retail investors are suckers at this poker game and the stock will fall back to 20 fast, right? That was when it was really picking up the heat. And they were also like, they were asking for it, right? They just kept like talking crap as it went higher, and they kept publicly shorting it, and they just kept being like, oh, this is nonsense. It's just because people are just sillily buying in it. There's no logical reason for this. Then they were going to have a live stream explaining why GameStop's going back to $20 fast. Citron Research cancels a planned report on short interest in GameStop amid supposed harassment from GME bulls. See, that is so ridiculous to put in there, because if you're going to enter this game that is the stock market, and you're going to enter the arena that is Twitter, now X, whatever the heck you want to call it, and you can't take the heat, get the hell out of the kitchen, because you got to be able to take the heat. Like, I understand that in putting my information online, in, putting stuff on YouTube, putting stuff on Twitter and X. If you're going to get in the kitchen, you better be ready for the heat. Like, this is the internet. Like, oh, supposed how are people harassing them? They were just saying, like, nope, you're wrong, and everyone was like spamming it, and technical issues or whatever nonsense, right? They just is baloney. It's baloney, in my opinion. GME's short interest stands at around 140% as of January 22nd, meaning 40% more shares had been sold short than actually existed on the open market. Occurred because shorted shares were relent and shorted again. Shares go up by over 50% to close at $65. So, with that being the case, a lot of the share repurchasing, looking back here, was going on leading up to this point. Where was it? But 30, I can't search through. What was it? 34? Yeah. This was in 2019 when they were repurchasing shares, right? Which also, by the way, the fact that the amount of shares they issued to pay off all their outstanding debt post January 2021 in mid-January, right, when Ryan Cohen and new board members completely took over. If you look at the shares outstanding, right, let's go to macro trends. The amount of shares they bought back relative to those that they issued, like, it's such a huge, huge difference, right? And it really just goes such a long way. But just to quickly finish up here, then, GME's short interest. January 25th, Citadel invests $2.75 billion in hedge fund Melvin Capital, which is heavily short GameStop. Which, by the way, eventually Melvin Capital completely went under. More than 175 million shares of GME are traded, and stock closed at 76.79. The next day, the true day of, I would say, pre-chaos, or the pre-chaos day, was after hours, and Tesla CEO Elon Musk tweets GameStonk and links to r/Wall Street Bets, the Reddit message board on which bullish retail investors discuss and promote GME. Which, by the way, I think Elon, he does not like the mechanics in the market, and he's straight up said in the past, I do not respect the SEC. He's like, I will abide because I respect the justice system, but I do not respect the SEC because of all the trying allegations and ways they've investigated him. So he's, long said there's a lot of bad actors at the SEC, allegedly, right? And then January 27th, the infamous day where it just goes absolutely nuts. And so I guess not infamous, January 28th is the infamous day where basically all the brokers start to take it off. And then you have the restrictions lifted, and they have the hearing and saying, "Oh, we don't answer to hedge funds. We serve millions of small investors who use our platform every day to invest." And claims trading houses were halted because they had to conduct actual trades made on the company's app that raised their prices, or claims that trading was halted because the clearinghouses that conduct the actual trades made on the company's app raised their prices. So they didn't have enough liquidity, blah, blah, blah. But just the fact that literally there's a message there's actually in court filings, I forget exactly where, but it's identified where they did communicate with Citadel. I couldn't tell you the exact detail of it off the top of my head, but there's evidence that they did communicate with Citadel, which contradicts what he said, right? So I guess you could say, oh, the context or that moment of this or that, but I don't know. And one of the most legendary lines of all time, a few things I am not. I am not a cat. I'm not an institutional investor, nor am I a hedge fund. As for me, I like the stock. Legendary, absolutely legendary. And then after March 2021, GameStop stock continued to see fairly drastic ups and downs, but none were as stark as January's short squeeze. Overall, the trend was down between early 2021 and late 2023. Stock remained popular, however, among both retail and institutional investors and among both bulls and bears, seeing higher volume volatility than it had in years leading up to 2020. Whether the company's directors' shakeup and strategic shift forward toward digital assets will spell long-term success for the video game retailer remains to be seen. I like how they just cut it off, March 2021. That's it. It's back to being over, right? It's back to being it for GameStop. So, pretty funny, but I just think that's kind of fun to recap real quick. Went longer than I expected, but Challenger, thanks for popping in. And classic. What did I say like 30 minutes ago? Like, oh yeah, I'm about to wrap it up here, guys. GameStop is done. Brokers are cool again. PCO never happened. Play options because they're safe. Nah, I see what you're saying, Scott, but we're chilling. What about accounts payable? Michael Patcher from Wedgebutch said that it's 50% from GameStop's revenue per quarter and that they don't pay their bills. Is it really that bad and a big negative fact what other companies don't have? No, Michael Patcher is full of baloney, right? He's always saying nonsense. We'll say it's 50% of GameStop's revenue per quarter. Accounts payable, that's not true. Let's see. I'm going to pull that up real quick. And Dakota Gregory Chadwick Duckingsworth the fourth. Thanks for being here. Hey gang, sorry I'm late. Now you're chilling. Elon hates short sellers too. Indeed, yeah, for a long time. I mean, they attacked Tesla, and look what happened to him in that case. The SEC has a whole department to screw with Elon, I bet. Yeah, honestly, I think so, to be honest with you. I mean, regardless of what individuals think of him, he's definitely, called them out for a long time on their baloney, that's for sure. Quickly, I'm going to look at what you said, Freshmaker. First, I want to show the GME shares outstanding. Then I'm going to look at what Freshmaker said. Then I'm going to wrap it up. For real, for real. Crazy how it's already 9 o'clock. So these were all the shares repurchased. They were repurchasing a massive amount of shares at the end of 2019, right? And when they did issue shares, they only had to issue a fraction of those that they repurchased, which is just extremely, extremely important. And when you look at how net income is moving, it's getting there. It's getting there right now, these stair steps. And I think we really need to get back to this eventually. And this is the ultimate goal, to just have consistent net income. And then you can repurchase shares again, potentially start to issue dividends in the long term of things. And we'll see where they go with it, right? And the plan's exactly for player. Potentials for acquisitions down the line. Someone had said Super League Gaming one time in here, which I thought was pretty interesting because I remember there was a rumor, right? Is this Super League Gaming? Oh, SLGG, that's what it is. I also need a higher desk. Kill my posture. Damn, they got crushed today. But their market cap, is that it? That's their whole market cap at this point? name change to Super League Enterprise, and 1-for-20 reverse split. That's never good. But damn. So their market cap is very low at this point. So if GameStop were to theoretically acquire them, I guess the reverse split just happened. I don't know why this looks like this, but this right here, March 2021, I remember there was a rumor of GameStop acquiring them and getting into a Web3, digital presence. So now that the market capitalization of this company has fallen greatly, is there some potential? I mean, if you read the profile, and I was briefly looking at it, maybe, but honestly, not too sure. But just the fact that it could be purchased for such a low amount of cash relative to their balance sheet, it wouldn't really hurt them in any way if it went totally to crap, considering the market cap is literally so low at this point. But we'll see where they go with it. And I want to see Freshmaker, what you said real quick. Accounts payable. Whoa. Accounts. Oh, okay. Why are we so zoomed in? Accounts payable for the quarter, it was 378 million relative to revenue for the quarter. No, that's not true. That's like 25%. He's capping. He's bugging. But let's see. Yeah, I see as a whole department screw the line. Again, motorized standing desk, one of the best things I've purchased. Yes, no, Dakota. I actually am fortunate enough to have that at my office. Like, it is amazing there. I always use it. Like, I use it, I feel like, the most among the people of my office, or I'm definitely one of the people that uses it the most, because like, oh yeah, I gotta do it. And also, this is where I have just a dinky laptop, whereas if I had a monitor, I'd be like this, and I have a webcam here, and I'm looking like more normal, so. But again, in the long term, little short-term pain for some long-term gain. You know what I mean? Just gotta get a little back pain, stretch it out. Afterwards, I'll be chilling. No, I'm chilling, but just gotta, I actually put it on my old PS4. So here, I'll show you guys my PS4 real quick. I'm a big-time sticker guy, so just stickered it up. There's also a bunch of stickers on my laptop. I don't know if I've ever showed you guys that, but so I was using this as like a little platform. Pretty much any sticker I got on, like I just slapped it on here because I just figured, why not? So yeah, I think I'll pretty much wrap it up here for today. Yeah, I've got to do some stretches after this. But yeah, bro, hitting me with the double AD SMH Tetron. Blank Conception, thanks for being here. What is it? The double ad? Oh yeah, I mean, hey, I don't know. The YouTube monetization system does its thing, right? Or the YouTube ad system is gonna do its thing. But yeah, no, really, thank you guys so much for watching, and to anybody who's watching this back, I also appreciate anybody who takes the time to do that. That's awesome. And yeah, so just gonna keep moving forwards, and I'll go through more of the 10Q next time, and just keep grinding forwards and keep seeing what happens with the company, right? And just continue to expand my knowledge base, expand my information on GameStop, and I'll keep writing information on Twitter. Look out for that. I'm going to make it into videos, keep doing my live streams, and just keep growing Tetron, right? Because I'm just growing like GameStop, brick by brick, on this journey. So hope everyone out there has a good night. Thank you for the stream. Have a good one, everybody. Yes, sir. Everyone have a good night. Have a good night. Yeah, trade that PS4 into GameStop and get a PS5. Maybe Freshmaker, but I don't know. I feel like I want to go desktop anyway, and like I'm kind of like a keep stuff kind of guy. Like even though I don't really ever use it, like I want to keep it anyway. Like I even still have my PS3, like just for the good memories. For that one random time, for some reason, with my brother or like an old friend, I'm like, you know what? Let's just fire up Black Ops 2 real quick, right? Like, or sorry, Modern Warfare 2. That was like the crap. Although I was terrible. I was so bad at Call of Duty, guys. So bad. But hi, friends. Take care. Anthony, thanks for popping in real quick. I still appreciate that though. Hope you have a good night. Scott, same to you. Everyone else out there, actually wrapping it up this time for real. Have a good night.